Hi guys. We are doing something off the cuff here today.
Yes.
We're literally just going over a mortgage Q&A. So I'm here at my open house and we have some time before people come in. So we wanted to really reach out to our buyers and ask some questions. So I get a lot of questions from buyers who really truly just don't know what they don't know.
Mm-hmm.
So I really wanted to take some time, ask you some questions so you could help explain it to them. So first thing we're going to talk about, you ready?
Let's go.
And by the way, guys, so obviously you know who I am. I'm Tashina. I'm the realtor, of course.
I'm Greg Nelson, the loan officer.
And I gotta go. Give me a second. Yeah. Greg, you can talk to them about all the different loan programs that are available. Hello. Hi.
I'm Jason Roth from Union Capital Mortgage.
Nice to meet you.
I just wanted to stop by. Here you have people, but just wanted to drop off some goodies
Thank
for
you so much.
We have an office in Grove City and just opened a new satellite office in Circleville.
Amazing.
So you're right in the middle of both, so I thought I'd stop by and introduce myself and just say hi.
Wonderful.
If there's anything you ever need, both ends, I'm
Got
there.
it.
I'm there.
Thank you so much
good
for
luck
that.
with your open house.
I appreciate it.
Nice looking house. I'm sure it'll be good. So,
Yes.
Thank you.
Thank you. Have a wonderful. You too. Bye-bye.
Conventional, you can go 5% down, 10% down, or 20% down. I think a lot of people think that they have to put 20% down for conventional products.
Right.
You could put a minimum of 5% down. And if you're a first-time homeowner, you can also do 3% down.
Okay. So that's really interesting. So a lot of people think 20% for conventional,
Right.
and you can go all the way down to 3 for a first-time home buyer.
Yeah, down to 3.
That's dope.
3%. Yeah.
That's dope. All right. So tell me a little bit about a 15 to a 30-year mortgage. Like pros and cons of that.
Got you. So 15-year, of course, is a shorter year. 30 years is much longer. But when you have your loan amount, let's say you're doing a $300,000 loan.
Right.
What it does, if you do 30 year, it stretches your payment. So your monthly payment will actually be low. You are going to pay more interest in a 30-year versus a 15-year. Versus a 15-year, you actually condition your mortgage term down to 15 years.
Okay.
Monthly payment will be a little bit higher.
Right.
But you save interest over the course of the year.
Okay.
Long term.
All right. So it's like a pros and cons. Like you got to figure out if you can afford to, condense to 15. Right. Or I've heard some people who even do a 30-year and then they make the 15-year payment. So they kind of get best of both worlds.
Yes.
Okay.
Yeah.
Awesome. I like that. All right. So this was your favorite question. So tell me about a pre-qualification versus a pre-approval.
All right. So pre-qualification versus pre-approval.
Great.
All right. You got a lot of people who say, hey, my bank told me I can afford to get a loan. The difference between pre-qual and pre-approval is that with a pre-qual, the bank don't have any documents or any pertinent information about you. You just basically tell them your credit score, how much you make per year. And so they basically just summarizing what you can afford versus a pre-approval.
Okay.
You actually providing income docs, W-2s, tax returns, and they actually pulling the credit report to analyze all your debts. And so pre-approval also analyze your assets.
Okay.
So any money that you have in the bank, your lender is looking at that as well.
Gotcha. So my favorite way to explain that is it's like when you first go out and you dating somebody and you get their phone number. That's the pre-qual. You just got the number.
Yes, that's the number.
The pre-approval means you learned a little bit more about them. You know if they're crazy or not. So we want to know if you can afford this house or not. And we want to know. So when you come out to open houses like this one, if you don't have a pre-approval, then we want to get you with a lender like Greg who can provide you with that pre-approval. So we know for sure that you can afford this house. I've seen so many times when people are like, well, I don't want to talk to the bank until after I find the house. And that's just not the way to go, because a lot of times you are wasting time, you're wasting money, you're wasting all of this energy on a house that you might not be able to afford. So I highly recommend you get that pre-approval in place. So that way we don't have to worry about all of those downsides later. I've had it happen to me with a lot of times and it won't happen again. So,
set the expectation.
Yeah, you have to.
Absolutely.
You have to. It's very difficult, and people will fall in love with the house and then can't afford it.
Exactly.
So you fall in love at a pre-qual and didn't do your pre-approval, man.
I like that.
Whew, It's tough.
I like that one.
It's tough. It's tough. So how do you get the best rate? Like, what should I be doing with my, to get the best interest rate?
Yeah. So to get the best rate, that's a great question. To get the best rate, the most important thing is the credit score.
Mm-hmm.
So every loan product is different for each buyer. The rates are predicated based on FICO score. So, if you're someone who's right now who's trying to get a mortgage, I would just say probably work on the credit report. Figure out if there's, you have a lot of debt, just try to pay those things down. But you want a good credit score. If you're going conventional, of course, you want to score it at 720 or above. FHA allowed buyers to have 580
right.
or more or higher. But even with a lower credit score, you don't get the most favorable rate. So if you want to get the best interest rate, I would definitely say work on the credit score.
Okay. Yeah. Awesome. Now, would you ever recommend someone, or is it more expensive if you have a 580 credit score and you buy a house?
It is.
It is.
It is. So 580, you're going to end up paying for an interest rate. And that's just being honest. You can qualify based on the guidelines.
Right.
If your income is good, but the score is low, you're going to end up paying for that rate. And that rate could probably be 8.25% or 8.125%. And the cost could be about $3,200 or $4,000. You can get the house.
You can buy the house.
You can buy it.
But you're going to be paying for it.
You're
going to pay all the money. We don't want that. We don't want that.
No,
and honestly, I tell people that all the time, I can get you qualified. I won't let you get qualified. And I know that sounds really demanding and aggressive, but I'm serious. I don't want to put you in a position where you're paying way more for a house than you have to. My goal is to get your credit up, then get you in a position to have that higher credit score, get that better interest rate so you're not paying for that. So much better idea. All right. So tell me, this is what everyone wants to know. Do you think rates are ever going to come down? Are they coming down? What's happening with the rates?
That's a great question. Man, I'm trying to figure that part out.
Right. I wish I had a crystal ball. Tomorrow the rates will be 3%.
Yeah. I think it's a misconception. Everybody thinks that loan officers know, but we know when you find out. But what I can tell you, what rates have been doing this year has been they came down from last year.
Okay.
But they just been staying flat for right now. So we're not really seeing any uptick, rates going up or coming down. But what I will say, what's going up is the price of homes. And so
for sure.
With rates, it's just one of those things where you just wait till they come down. But if you can afford to buy, I would say buy now, because the prices of homes will continue to increase, and $1 today is not worth the same dollar tomorrow.
That's true.
And so if you can buy now, buy it, and if rates do go down, you could always refinance within 6 months after you purchase.
Yeah. That's a great question. Actually, that was one of my questions later on, so we don't have to talk about that anymore. You skipped it. It's fine, though. It's cool. No big deal.
Yeah.
No, what's funny is, you guys, a lot of times people will say, oh, I want to wait till rates drop. Let me tell you what happens when rates drop. Just like what happened over COVID, rates hit rock bottom. We will probably never see those prices again, ever. Those interest rates again. We'll never see that. So if you wait, people were coming out of the woodworks with cash. Somebody paid $900,000 cash. Sir, what do you do for a living? Excuse me.
Wow.
You're going to pay way more just to save money it's not going to be it, because people were literally offering sellers $50,000 in addition to the purchase price. Hey, the house is not worth $450,000, but I'll give you $450,000 anyways. No matter what the appraisal comes in at, I'm bringing an extra $50,000 to closing. It's yours. What?
Just like that.
Just like that. It was nothing. And I'm okay, cool. Matter of fact, let me tell y'all a funny story. This is just hilarious to me. I had a listing in Grove City. Favorite listing ever. It was an older person's home who needed to sell quickly. I was sick as a dog. I probably had COVID. We're not going to talk about it. During COVID times, I had a listing, did the open house and all that stuff. We got multiple offers, probably 15, 20 offers. The person who ended up winning, not because of this, but it was not going to hurt him, sent me Bob Evans to my house with chicken noodle soup.
Wow.
That's how crazy the times got. They were offering chickens, which now in retrospect, I probably should have took a couple of them.
The eggs.
It was the eggs. Could have made a killing. That was some toilet paper. There was a lot of stuff being offered above and beyond just the standard purchase.
Yeah.
and including an appraisal gap. And that's a whole different story that we can talk about later. Okay. So let me get back to it, because if not, I can go into crazy stories all the time. Yes, these are some really good ones. Now, the next one, fixed rate versus adjustable. You know, back in the day, you know, the entire world went to hell based on these adjustable rates. And so everyone is afraid of these adjustable rates, but they're really not understanding the difference between like adjustable rates of back in the day to adjustable rates now, and the balloon payment thing. Like, let's talk a little bit about that.
Yeah, I would definitely say back then a lot of stuff wasn't regulated because we had the market crash in the mortgage industry. A lot of those adjustable rates are more regulated now. Right. And so you're not going to get an adjustable rate with a 15 or 16% interest rate. But with a fixed rate, it's exactly what it says. It's fixed. You know, if you do a 30-year mortgage or a 15-year mortgage, that rate is not adjusting at all. With the adjustable rate, it can adjust, you know, if you did like a 5-1 ARM, the first 5 years, the rate will be locked at a fixed rate, and then after that, it will adjust. Right. But the good thing with adjustable rates is, I know it's have this negative, you know,
they do.
The negative thing about it, but with adjustable rates, you know, think about it. Like if you're buying a home and you say, hey, if I could do a 5-1 ARM, that means for the next 5 years, your rate will be whatever that lower rate the lender is offering during that time. It will be that low. Let's say 4.25. It will be 4.25 for 5 years. And after 5 years, it will adjust. I just look at it as a savings plan. You can say, hey, what I would normally pay for market rate, let's say 6.5. If I'm saving that money, the difference between 4.25 and 6.5, if I'm saving that money within 5 years, you can do one or two things. You can either refinance the 6-year into a fixed mortgage, or sell your home. You know, most people sell their home after the adjustable period.
That is true. So definitely look into those options, because if it can save you, or what I realized, and I guess this is a newer like way to look at it, if you're in, let's say, a degree program or a doctorate program, a lot of people utilize those because they know, like, I might not be making the dollars now, but when those real checks hit after, you know, the real money comes in, then I can make this little six and a half payment, you know, percentage payment. So that makes it easier for them to digest. So definitely look at that program and see if it works with your life, but also be intelligent enough to make sure that you're actually saving money and prepared for whatever comes after that adjustable rate changes to the correct one. We all know that if our payment was 18, we ain't gonna want to pay 3,000. We all know that. That's just a standard, you know, that's just standard feelings. But just be prepared that that could be a possibility. So just know that. Okay. One of my favorite questions that everyone and their grandmother asks is, what about the down payment assistance programs and the grants? Which ones do you have to offer?
So right now we have FHA.
Okay.
FHA down payment assistance program. It's called a Zero Flex. Basically, you don't have to put anything down. With those down payment programs, it's the money that you would bring to closing for the closing costs for down payment is actually created in the second lien, where there is no interest on that down payment or no monthly fee. Okay. Minimum credit score is 620, and there's no income limit. So you can be a first-time homeowner or current existing homeowner, and that's for the FHA.
But you can only own, like, you couldn't have another house and then purchase this one.
That's correct. So for FHA, it has to be a primary residence.
Primary residence. Absolutely. So don't be asking me that, y'all. Y'all already know the answer.
She already told y'all.
I done told y'all what's up. All right, listen, Greg. I really want to buy a house. I got good money. I make dough. But my credit legally,
all right.
It's not under my mattress. It's not pretend money. No, I don't make it with. I don't make it on the streets of Ohio. You know, whatever. But what should I do if my credit is not where it needs to be? Like, my credit is really embarrassing. I don't even want to tell you the number. What should I do? Like, what are some things that I need to do first?
That's a great question. What I will say to that, before paying a whole bunch of debt off, I think getting with the lender first to pull credit, even though you're not in the process of buying a home. But I think sometimes you don't know what you don't know. And sometimes you could be like, I need to pay this off, pay that off. Sometimes it may not move the needle. And so probably the first step is getting with a lender to pull the credit to tell you what line items are actually affecting your credit score. Because you could be paying off bad debt that's not going to increase your credit score.
Mm-hmm.
And so I would say get with the lender. If you're making good money, if you want to buy a home, I would say get with a lender first. And then once you get with a lender, have a plan as to what items that needs to be paid off, and then just pretty much just start paying those items off.
That's actually a really great point. And I'm going to like give you a precursor step to getting with the lender first. Get with a realtor first, aka me. No, seriously, because not all lenders are created equal. I am a realtor. I've been in the business for almost 14 years. That makes me feel old. I'm not going to talk about it. I am. I don't look like it though. I was carded the other day. But anyways, get with a realtor, because us realtors, we have relationships with lenders like Greg, and we're going to know for sure, because not everyone is going to be willing to provide you with information about how to build your credit. Most of them will be like, ooh, yeah, your credit looks like crap. I can't help you. That's fine. That's fine. That's okay. That's within their limits. They don't have to help you. But me, as a realtor, I'm able to provide you with information of lenders who are going to say, hey, this lender is going to be able to give you that information. And I'll give them a heads up. Hey, this person's not really ready to go yet, but they need to know what's on their credit and what to fix so we can move forward and how quickly they can. My goal is not to rush you into anything. I want to make sure that we're doing the right things. And then getting you in connection with the right people is like literally my job. So that's what I like to do.
And I preface that you're right. First step, not get with the lender, get with the realtor.
There you go. See, you sometimes you just gotta get people together. You just gotta correct people sometimes. You just gotta let them know. Not any realtor, specifically me. Absolutely. Call Tashina. All right. So we really already talked about this one. We said, what if rates drop after I buy a home? Of course, you get a chance to refinance, and you can. So you said within 6 months you can refinance, or you want to wait 6 months? Wait 6 months. So all you have to do, if you want to refinance your home, wait 6 months, and then you can. Once after you buy your home, you can refinance after 6 months. So that's an opportunity for you to take advantage of the lower interest rates, literally almost immediately. So I highly recommend it. I think that's all I have for you today. You have any questions for me?
Man, so tell me about it.
Tell me about your life story. How did you get here? No.
It's pretty much the same questions, but I think you have buyers.
I do.
People coming with you. Like, what do you tell buyers who like sitting on the fence though?
What do I tell?
Yeah.
So I'm like a now or never person. So I have a couple of stories. Let me try and think of what I would actually say. On the fence, basically the same thing. Like, you're not going to save money by sitting on the fence. You're literally going to lose money by sitting on the fence. You're going to lose money because you are going to either end up paying way more for your house, waiting for these interest rates to drop, and then the prices are still going to increase. You're going to either overpay your credit down if you don't speak to a lender or agent first. So really, it doesn't benefit you to wait. Unless you have like a bankruptcy or a reason why you absolutely cannot move forward right now, there's really no reason to wait to buy a house. Like, if you find something out there that you absolutely love, which I'm sure we can do, then you should absolutely jump on it.
Got one more for you. That's good. And I should layer this.
That's okay.
This next
Let's
question.
go.
So you have people who renting right now.
Yes.
They may be paying $1,500, $1,600 in rent. And they want to buy a house.
Yes.
They make good money. But they have a budget. They like, hey, I don't want to spend no more than $2,000. Okay. But I want to live in a great school district.
Oh, yeah. Ooh. Okay.
And so, like, what are those conversations like?
Those conversations are really eye-opening, because I am going to, like, a lot of times I don't even ask, what do you want to pay? Because although that's a question that, like, will come up at some point, I'm not going to ask you that, because, like, when you tell me you want a 4-bedroom, 2 million square foot house for $2,000, I'm going to say, so do I. Like, that's the truth. Me too. Duh. Everybody does. Like, it's not realistic though. So let's be realistic. So I have to have those realistic conversations, and I have to provide them with a realistic expectation. I will show you, one, crappy house in your price range that you think that you want.
Mhm.
I might even show you too, kind of giving you that eye-opening experience, and you're going to look at me and be like, what is this? I've lost clients from that because they're like, why would you show me that?
Yeah.
That's what you wanted. You wanted 2,000. This is what you get right here. I got the notes. 2,000. So honestly, what I do is in my consultation, we actually go in detail, and I don't think a lot of agents do this, but I have a full debt to income ratio, and I have an estimate of what you would approximately afford before they even speak to the lender. I want to know, are you a new build candidate or are you an existing home candidate? Which locations do you want to live in? So we're going to have this in-depth conversation, because it's not just, oh, let me get you to the lender. It's, okay, what lender? Because sometimes you might not even like Greg.
That's true. That's true.
I'm just kidding. Greg's cool. Just kidding. No, but seriously, you want to have somebody on your side and in your group that you vibe with. If I have someone that needs a lot of conversation and communication, I know for sure Greg is going to provide that. If I have someone who maybe needs some direct information or whatever, I have another lender that might be able to provide that maybe a little bit more directly. So there's other, personality fits that I do in addition to making sure that the down payment assistance program, if Greg doesn't have it, maybe there's another lender that has it. So I'm really open to having, actually I have multiple relationships, but also having, just being, open and providing them with all the details, because that's my goal. My goal is to educate you through the home buying process.
Yeah, and that's important too.
It is.
Not just filtering through one lender, one
It's
partner.
It's it.
It may not
Although
fit
Greg
everybody.
gets a lot.
Yeah.
Greg gets a lot because he's really good. He's got somebody close. That was what, 12 days or 12 days with one of my clients. We were in dire straits. They had to be out of their house by a certain date in November, and they fell out of contract on one house. So we had to find a house, go in contract, and close within a 12-day period. You guys, and they had to move out, and we did it because we're like a dream team. This is give me a basketball reference, Michael Jordan and who Michael Jordan, Scotty.
Yeah.
You know what I'm saying? We the team. We're it.
Yeah.
So,
but I also want to say this too. I
please.
appreciate the credit. But every client you send me, they come well prepared. She does an awesome job, and I can tell the difference.
Yeah,
when you send
it's
a client.
huge.
Yeah,
it's important.
Yeah,
you have to have, because I did not understand buying a house until I got into real estate. I didn't understand, and I truly didn't understand until I bought a house and then helped other people buy houses and then went through all the different adversities and things that we had to go through. So really now my goal is to give you as much information. My consultations should be 15 minutes so I could, get to another one. But generally they're about an hour, because I want you to be comfortable and I want you to be well prepared. And a lot of times at the end of it, I'm like, okay, you have any questions? And they're like, no, you've hit everything. And that's what I want. My goal is to really educate people. That is my entire life story, because it's no fun getting through an entire process and having no clue how you got here.
That's true. Yeah. So after pre-approval with her client, I called the client just to check in the next day, just see how everything was going. Yeah, we've seen about 6 homes already. I'm like, man, this is working.
We don't play. There's no time to play. You
That's
want a house, we're going to get you
Yeah,
one. So I go on your time, so I'm not going to rush you. I'm not going to push you. But if you say, hey, I got to be out of my apartment or I got to be out of this thing by whatever day, cool, let's go. It's on. It's on. All right. Any other questions? Or are we good?
I think we're good.
All right.
Yeah.
I really enjoyed your time today. I appreciate you for letting me put you on the spot here at this open house.
This is
dope. For me too.
Yeah.
Guys, I love a good video. I do, but I hate posting them. So me forcing myself to go live is everything, because if not, I would never post this thing. It would be in my archives.
Just get it done.
So I'm getting it done. So that was on my list today. Check, I've done it. Thank you guys so much for watching. If you have any questions, list them below, and Greg and I will make sure that we tag team and get them over to you, get those answers. Okay?
Cool. Sweet.
All right.